back at it. It's gonna be part 2 of the market structure breakdown. Okay, let's get into it. So, remember what I said in the last video in part 1? We just worrying about current price. And I said you never go as far back as you can't see. So, what we would do first is mark up our weekly range. That's the only thing you need to worry about. Every week you get on the market, just mark your weekly range. So what I do is, what I said, two opposite candles represent a support or resistance, a major support or resistance. And it's very rare cases where you're gonna have to like just mark up the highest point of the weekly range without two opposite candles when it comes to the weekly range. So my weekly ranges are purple. And you can change yours to whatever color matches or whatever color fits or works for you. So, I mean, as you see, as we go down, we just gonna tighten up each zone. So we start from the weekly. As we go to the daily, we're gonna tighten up our weekly. We go down to the 4 hour, we're gonna tighten up our daily. We go down to the 1 hour, we're gonna tighten up our 4 hour. We're just gonna keep tightening it up as you go down. And you're gonna see how previous price action towards the left is gonna align with it. So you don't even have to go back. You just gonna be slapping the market, supporting resistance zones back to back without you even having to mark up each area in history. So that's our weekly range we're in. So it goes to the daily. And I'm just giving this free game because it's a lot of misinformation on YouTube for free. And it took me so long. Like I went through the good, bad, and ugly trying to find good information with credible traders, man. And I know a lot of people really don't have the funds starting off in their journey to like pay for these high price courses or pay for an actual mentor that actually is showing them like key things that make sense. So this is me just giving free game from all of my mentors that I learned from, because it's so much resources, but you have to find credible resources. Otherwise, you're gonna be wasting time. So now what we're gonna do is we're gonna mark up our daily high, low, open, and close that price hasn't cut through yet. So when you're marking up your zones, you want to see clean ranges to the right. Like I need to see clean ranges. I don't need to be marking these up and prices already cutting through. Prices already disrespected all these higher lows, open and close areas. I need to mark off everything that's clean to the right. So, and you see what I mean? We see right here, you see how at the top of this on the weekly was just one blue candle, and we go down to the daily, it's two opposite candles. That's why I say like you gonna see as you go down, it's gonna all correlate together. So we can just tighten this up and make it smaller and just drag it to the edge. Come on, work with me. So this is what current price is at. Okay, so no, we just worry about current price because this is the daily. So it takes a long time for all this to get disrespected and react. So we're gonna start from right here. And my daily zones are gray. I said you're gonna mark the high, you're gonna mark the body, and that's it for this one. See, I wouldn't mark. Remember, I said each wick, but I wouldn't mark this because this candle right here, price is already cutting through it and disrespected all these previous zones. So we'll just leave this alone. So next candle we mark up is this. And usually if the wick is close to the body, I try to mark up both just to save you time. And as you get up to the higher time frames, you can just clean it up. We're gonna clean it up. You're gonna see. But if the wick and the body is close, if it's short, you just mark both if you can. But when it's far like this, you mark up the high and the body, or vice versa, the body and the low, depending on what side of the market. So we're gonna clone it again. Clone this again. Let's see, you're gonna make this one a little thicker because the body and the wick kind of line up. Okay, just clone this one. Excuse me, y'all. Okay. And I wouldn't mark this up because again, you see this blue candle disrespected, like it violated all this, and I wouldn't mark this because this blue candle. I won't mark none of these bodies because it is a blue candle. So what we'll do is just go straight down to the bottom. I'll just mark up that body and that wick together. And that's cool for right now. You ain't gotta mark up all these because it's the daily. It's gonna take a lot of time for it to really push down all the way there. So now what we do is go down to the 4 hour. And a lot of times the 4 hour and the daily lines up with each other. But as you go down, you just tighten up and clean up and get rid of anything that doesn't make sense. So like for example, with this zone right here, I will pull this down right here. Boom. Because it lines up with this body and it lines up with that width. So that you can leave that one right there because this gonna make sense on a smaller time frame. With this one, I will delete this one because price is cutting through this one. So I would delete this one. Bring this one down to this body. Boom. Okay. Now with this one, I would bring this one up and I would delete this one. Doesn't make sense. I might end up deleting this one, but we're gonna see as we go down on a smaller time frame. Delete. Doesn't make sense. Put this one down. Delete. Doesn't make sense. Okay. Let's go on to the 1 hour. Okay, the 1 hour. Okay, so I could delete this because it doesn't make sense. So delete it. Alright, just put it to the end. And I know you're still seeing like opposite candles, but these are the ones that really matter. Like these are where the big pushes at. Not saying we're not going to mark these off, but these are going to be marked off on the smaller time frame. But you see what I'm saying? Like beautiful markups, pushed off, boom, came down right here, pushed up, came back to retest it, pushed up. You know what I'm saying? So I won't be surprised when the market opens, this area right here just push straight down and test either this zone right here. That's why I said these were the random lines coming at, because this is a previous strong resistance turn support. See, it kept rejecting right here to the left. You know, see this whole area just kept right here, rejected, came down, just kept playing in this area. Then boom, kept rejecting, rejected, pushed all the way down. Even when it came right here, rejected, played around in the area, came around, pushed up. So always pay attention to that as you're going down your, like to your hour and 30 minutes, even your 15 sometimes. You look at areas like this where the market has played around, because these are potential target areas to watch out for after you enter from these key zones. Once you enter from your key zones, these areas like this are like your potential targets to watch out for. See what I'm saying? Like this right here will be another target right here, because it's like, see what I'm saying? It was support turn resistance right here, right here. Then you go over right here, kept playing. See what I'm saying? Kept pushing off. So if you was to enter right here Monday, if it still show a bearish scenario, you would TP1, TP2, TP3, easy. See what I'm saying? Like let's put the tools. So we was to enter right here when the market open. You can boom, stops above the previous high. You got 3 TPs. TP1, first yellow, TP2, second yellow, TP3, the next key major zone. Let's go to the 30 minute. Remember I said in the last video, your 30 is the lowest time frame you mark up. So you just tighten up. See what I'm saying? Like, that's what I mean. Some of your areas might be already tightened up enough. It's just extra confidence. See how your areas, all your areas slapping. You can pull this up to right here. You can drag this over. You can drag this one over too. And again, you just mark up your key area zones where the market is showing previous strong support and resistance area. So I could have kept that yellow line because, again, TP1, you get what I'm saying? TP2, TP3. Right? That's if this shit still goes bearish when the market opens. It's like right here. If we was to enter right here, just delete this. So if we was to enter right here, suppose this platform I can't rewind like on trading view, but being that we know this is a major zone, you could enter right here. Okay, if you were to enter right here, stops below, a little breathing room. CP1, and you can see, boom, quick 1-to-1. See what I'm saying? Just fully rotate to that next major high. TP1. Let me see. Boom. TP2. See, 1 to 2. See, I'm seeing it without even this is how you do your TPs, man. Go down to the 30 and 15 from previous areas of market. Just show strong support and resistance. That's right here. Boom. This could be TP3, or you can pull it down a little lower just to be safe, because this is another major zone. You see what I'm saying? You just mark your TPs at each previous support and resistance zones to the left. Boom, TP4. See what I'm saying? All right. Boom, slap. Slaps, kept slapping. You see what I'm saying? Like, it stopped right here, opposite candle pushed up. These are strong zones, but you wouldn't enter off your gray zones. And sometimes, I'm gonna be honest, if you catch the move late, you could enter off these zones, but just be very, very careful. Like, if you do that, these definitely like 1-to-1, 1-to-2s. You see what I'm saying? But if you catch your moves off these gray zones with the correct bias of the trend, you can hold it. This clearly, you know what I'm saying? Cool. It's a 1-to-1, 1-to-2.5, 1-to-4, 1-to-6. It's just on how you see the market. I'm just trying to help you clarify on how to enter your trades and hold your trades with confidence, so you can think in probabilities and not just be in it like, oh, because that was my big problem. Once I enter the market, I would just see green and want to take it, but I would be cool with sitting and drawdown. And that was because I didn't have a calculated risk or calculated targets on how I was reading the market. But again, like I said in part one, just get your bias, get your correct bias, grade all your time frames in 10% increments. Do your markers right from your key zones. Go to your 30 and your 15 minute to look for strong support and resistant areas. Really your 30-minute. And just go to your entry time frames, 2, 5, 15 minute, whatever you enter on and you feel confident, even the 1 minute. Wait for your bias to shift in the trend of the overall market. But that's just some quick tips. Let me know if anyone needs help with anything else, but I believe that's all I got for this video.